Hello, this is Steve with the Free Bullion Investment Guide. Today is June 15th, and I'm doing a review and outlook for the US dollar. This is the US dollar's daily chart, and in review of the last video, I'd shown you this falling wedge pattern, which is a positive pattern for the US dollar, and as we can see, the dollar did rise above it, breaking it. Now, the reasons behind the US dollar moving up and breaking it is really because the US dollar was in oversold territory. There's really nothing behind the dollar motivating it higher. The Fed is constantly hinting that they're going to lower rates, as well as the China-US trade war also isn't helping the dollar because it hasn't been resolved, and there really hasn't been too much motivation for the dollar to go higher, except for the fact that it was oversold. So that's, I believe, is the biggest factor behind the dollar's rise last week. Now that I'm showing you that this pattern has been broken, I do still see I see actually two patterns in the US dollar chart for the outlook. I see a positive pattern here, which is a falling wedge. Let me just move these numbers out so that you can see it better. And then I also am showing a rising expanding wedge, which is a negative pattern for the US dollar. So we have a negative and a positive. I'm actually expecting the positive to be broken before the negative, simply because I still think the dollar's climbing by the way of the MACD. Looks like it's signaling that the dollar's still moving higher. So I expect the falling wedge to be broken to the upside before we start to come close to breaking the rising expanding wedge to the downside. Now, I don't usually like to be putting all these patterns on the chart. I just think it looks really confusing with all the different lines, but I think you can see what I'm talking about, that the falling wedge is going to be broken before the rising expanding wedge. Also, we have 97.60 as resistance, 97.85 as resistance, as the dollar tries to climb higher, and I think that's literally expected as it tries to climb higher, because the Fed will be coming out with their statement on the 18th and 19th of June, which is just a few days from now. I'm really expecting the Fed to say that they're not going to raise rates until July, which will be a helpful boost to the U.S. dollar, and it's likely to break this pattern then. However, they're going to lower them. Likely in July. That's what they're hinting towards. I think they want to see another jobs report and see how the next jobs report comes out before they make their final judgment call on whether they're going to lower rates in July or not. But once the initial shock of the fact in the market that they're not going to lower rates in the June meeting, then I think we'll see the dollar top out and start to fall again, and it may break this pattern next week or the week after. I wouldn't be surprised that the rising expanding wedge is still in the chart next week. So that's the review and outlook for the US dollar. I thank you for your time. Take care, and God bless.